Good day, ladies and gentlemen, and welcome to the SurveyMonkey First Quarter 2019 Earnings Conference Call. At this time, all participants are in a listen-only mode. Later, we will conduct a question-and-answer session, and instructions will follow at that time. If anyone should require assistance during the conference, please press star, then 0 on your touch-tone telephone. As a reminder, this conference call is being recorded. I would now like to introduce your host for today's conference, Mr. Kareem Damji, Vice President of Investor Relations. Mr. Damji, you may begin.
Thank you. Good afternoon, and welcome to SurveyMonkey's First Quarter 2019 Earnings Conference Call. On today's call, we have our CEO and Interim CFO, Zander Lurie, and our President, Tom Hale. Prior to this call, we issued a press release and shareholder letter with our financial results and commentary for our first quarter 2019. Those items are posted on our investor relations website at investor.surveymonkey.com. During the course of this call, management will make forward-looking statements which are subject to various risks and uncertainties, including statements related to our strategy, investments, revenue, and cash flow. Actual results may differ materially from the results predicted, and reported results should not be considered as an indication of future performance. A discussion of risks and uncertainties related to our business is contained in our filings with the Securities and Exchange Commission, in particular the section entitled Risk Factors in our quarterly and annual reports, and we refer you to these filings. Our discussion today will include non-GAAP financial measures. These non-GAAP measures should be considered in addition to and not a substitute for or in isolation from our GAAP results. A reconciliation of GAAP to non-GAAP results may be found in our earnings release and shareholder letter, which are furnished with our 8-K file today with the SEC and may also be found on our IR website. I'll now turn the call over to Zander.
Thanks, Kareem. Good afternoon, everyone, and thank you for joining us on the call today. We had another strong quarter. In Q1, we grew revenue to $68.6 million for 17% year-over-year growth. We generated $7.5 million in unlevered free cash flow for an 11% margin, which also includes $0.9 million in one-time transaction costs related to our acquisition of Usabilla. Our financial results demonstrate consistent focus on delivering disciplined growth and generating robust cash flow while making investments for the future. We continue to accelerate growth in paying users, which now stand at approximately 671,000, up 10% year-over-year, and up over 24,000 paying users from Q4 2018. Approximately 90% of our net adds in Q1 joined on annual plans, primarily via sales of SurveyMonkey Enterprise and our collaborative teams offering, which drove the mix in our annual paying users up to 78% from 75% a year ago. We know through our many years of cohort data that annual users have longer retention periods and are therefore higher lifetime value customers. Enterprise sales comprised approximately 16% of revenue in Q1. During the quarter, we began a targeted sales motion selling our market research solution, Audience, directly into organizations, primarily in the financial and consumer goods sectors. We're already doing business with these organizations, and we've now put sales reps against certain named accounts because we see significant opportunity to grow and upsell those customers. On an apples-to-apples basis, without this benefit of Audience revenue, enterprise sales would have been 14% of revenue, up from 13% in Q4. The sales-driven portion of our Audience revenue is another vector in the continued growth driven by our enterprise sales strategy. In April, we acquired Usabilla, our first acquisition as a public company. Usabilla enables organizations such as Lufthansa, Philips, and Vodafone to collect, analyze, and act on real-time user feedback across websites, apps, and email. Usabilla was a strategic acquisition for SurveyMonkey because it complements our products, extends our reach in enterprise, and is strongly aligned with our strategy, business model, and importantly, culture. Usabilla offers a high-value solution on a pricing plan that scales with the value provided to the customer. As an example, pricing on the Usabilla website feedback solution is based upon the number of page views on the customer website. So as the number of page views grow, so does our monetization. We believe this acquisition provides SurveyMonkey a compelling opportunity to deliver more value to our customers. In the process, we accelerate both our enterprise and international expansion efforts. Our mission is to drive growth and innovation for our customers, and we're doing this by focusing on our primary growth strategies, which all are in service of driving greater monetization, improved retention, and growth in paying users. First, selling SurveyMonkey directly to enterprises via our sales channel. Second, driving adoption of our collaborative teams plan. And third, investing in our international operations to further expand our business outside the United States. Our continued execution against these growth strategies, coupled with the acquisition of Usabilla, gives us increased confidence that we will be in a position to accelerate growth in the second half of 2019 and beyond. I'll walk you through Q1 highlights relating to our primary growth strategies, and then I'll turn it over to Tom to go into more detail about the product and marketing initiatives that support them. Starting with enterprise sales. We're continuing to execute against our plan of selling into our massive user base of over 17 million active users in over 350,000 organizations. In a world of land and expand, we've already landed. It's our job to leverage our footprint and turn those individual seats and ultimately Teams accounts into direct relationships with organizations. We grew our enterprise sales customers to over 3,900, up 38% year over year, and up 343 customers from Q4. Our customers span a breadth of industries and company size. New customers signed in the quarter show SurveyMonkey's broad appeal and resonance across industry and company size, like oil and gas, Baker Hughes, professional services, Jacobs Engineering Group, government R&D contractors, Sandia National Labs, and technology companies, Shutterfly, Glue Mobile, and Malwarebytes, and major companies in financial services, healthcare, and manufacturing. Regardless of the product or service being sold, we believe that every company needs to collect feedback from their most important constituents, their customers, their employees, and the market. Once an organization hits a certain size, the need to capture data in a programmed and secure environment warrants a conversation with our sales team. We're building out a world-class sales team and are on track to double the number of customer-facing reps by the end of the year. We've got an aggressive hiring goal spanning multiple locations, which means sales training and enablement to get our reps ramped to exceed their targets. We're getting better each quarter at generating qualified leads, building pipeline, and driving increased efficiency. We expect greater contribution from our sales reps through the course of the year, which we believe should lead to accelerated revenue growth in the second half. SurveyMonkey is thriving in a multi-billion-dollar category. Our products deliver a tremendous amount of value to our customers. We're investing in our business model to layer in additional growth vectors beyond seat licenses, ones that price to the commensurate value our products deliver to our customers. Our purpose-built solutions, integrations with partners such as Microsoft and Salesforce, and now Usabilla, demonstrate our evolving enterprise strategy. I'll share one example of how customers are driving value from our products. Take Metromile, a new innovative pay-per-mile insurance company. Metromile uses SurveyMonkey Enterprise and our Salesforce integration to automate gathering feedback for customer service to help them stay on top of customer interactions via Net Promoter Score, customer satisfaction, and post-sales feedback. Utilizing the data from their surveys, Metromile increased their first call resolution rate by 10% quarter over quarter, thereby increasing customer satisfaction and reducing costs. And they've since expanded using SurveyMonkey to track customer sentiment across all interactions. Now to Teams. We're capitalizing on an opportunity that we believe is germane to SurveyMonkey, to recognize value from rampant account sharing that's taken place on the SurveyMonkey platform for many years. With our collaborative Teams plans, we're encouraging people who are sharing accounts to sign up for a paid Teams plan where each user maintains their own credentials, providing a much better and more secure experience. On the international front, we're making the investments required to accelerate growth in our international business. Our European sales team is up and running and already closing deals. The addition of the Usabilla team expands our selling effort. I'll now turn it over to Tom.
Thanks, Xander. We rolled out account verification at the end of Q3, just after we launched the Teams packages. As a reminder, account verification identifies when there is account sharing, notifies users, and merchandises Teams plans. We're pleased with the results so far and the positive impact on our paid user numbers. And with more than 6 months of data, we have increased confidence that Teams will continue to be a tailwind as we head into the second half of the year. At the end of Q1, roughly 60% of our paid user base had been enabled for account verification. We're taking a measured approach to ensure that we deliver a great customer experience. This means that we're pacing the impact of account verification on Teams to build over time. Some accounts adopt in weeks, others adopt in months or longer. The ramp depends on many factors: the frequency of use, the degree of sharing, the number of active users, seasonal variations in their use case or shared usage. As a result, while we expect to complete the rollout of account verification in Q3, Teams adoption, even from our earliest cohorts, will continue. We're also continuing to see better than expected success in new customers buying multiple Teams seats right off the bat. We observed this trend in Q4, and in Q1, our data-driven test and learn activities accelerated the adoption of net new Teams seats. Because the mix of new Teams seats favors the higher value Team Premier package, we're steering into new sales of Teams, and as a result, as we exited Q1, we made the Teams packages the default display on our pricing page. Teams plans have been purchased by 154 of the Fortune 500 companies, 46 of the Fortune 100 companies, and in over 90 countries around the world. When we see large team sizes and concentration of teams within organizations, it's a great signal that we have a high-value opportunity for our sales force. With the Teams rollout well underway, in Q1, we turned our attention to increasing the value we deliver for our higher-end customers. A great example of this is sentiment analysis, which we launched in February. Open-ended questions provide some of the richest feedback but are time-consuming to read and require manual review. Sentiment analysis automatically categorizes text responses using machine learning and natural language processing, allowing our customers to quickly identify topics that need their attention. We're proud to lead the market in offering powerful capabilities like this at a disruptive price point. In addition, we continue to invest in building an ecosystem of partners and integrations for our enterprise customers. Our partners like Salesforce and Microsoft have millions of users and hundreds of thousands of customers, all of which have a need for a system like SurveyMonkey. By integrating people-powered data into these systems of record, we're creating value for our customers and our partners. We're currently mid-stride on building out the Lightning version of the SurveyMonkey integration with Salesforce. Today, our current integration is a featured solution on the Salesforce App Exchange, and we're seeing good success at selling to the Salesforce customer base. In Q1, we saw a lot of traction in our strategic partnership with Microsoft. We shipped our Power BI integration in February and started to develop a vision to expand on our existing integration with Microsoft Teams. The result of this joint innovation was previewed in Satya Nadella's keynote at the Microsoft Build conference earlier this week. The presentation showcased SurveyMonkey working together with Microsoft Graph and Microsoft Outlook to imagine the future of intelligent peer-to-peer feedback from colleagues that you work with most frequently. Our teams are hard at work on making this vision a reality, and we can't wait to bring this new innovation to our joint customers. Turning to marketing, we're getting more efficient and effective at generating demand. In Q1, our marketing team produced a new high water mark for pipeline, a material increase over Q4 with a slightly lower marketing spend. In addition, we're getting more efficient in our SEM spend, and we're directing these savings into Q2 efforts that will demonstrate how SurveyMonkey delivers value to business leaders and enterprise organizations. For example, over the course of Q2, we will be launching Curiosity Conference Live, a SurveyMonkey-branded event series in New York, Chicago, and San Francisco with speakers from leading companies like Salesforce, Zendesk, and Unilever. In Europe, we'll be exhibiting and speaking at the Salesforce World Tour in London to reach Salesforce customers. This month, we'll be launching a test of a brand campaign that leverages out-of-home channels and digital channels to promote the perception of SurveyMonkey as an enterprise-grade platform. As we always do, we'll be testing and learning in Q2, and we are excited to measure the impact that this test will have on our business to inform investments in marketing for the second half of the year. Near the end of May, we'll be launching the initial phase of our European cloud data center to new enterprise customers. Our new cloud infrastructure will improve our user experience and site speed and allow us to host data locally. Our exec team will be in Europe for the launch, meeting with customers, prospects, and press. We know that data sovereignty and privacy are critical to European prospects, and our Dublin sales team is ready to start selling. Between teams, product investment to deliver greater value to customers, and our foundational international investments, we have increased confidence in the effectiveness of our growth drivers. I'll now turn it over to Xander for our financial results and outlook.
Thanks, Tom. I'll quickly touch on our Q1 results and then move to our Q2 and full-year outlook. Revenue was $68.6 million for a 17% year-over-year growth, driven by a 10% year-over-year increase in paying users and an 8% year-over-year increase in annualized revenue per user, or ARPU. Before moving on to expenses and profitability, I want to clarify that unless otherwise noted, all income statement and cash flow measures that follow are non-GAAP. You'll find a reconciliation of GAAP to non-GAAP results in our earnings release and shareholder letter on the website, which we provided with our 8K file today and with the SEC. Also, as a reminder, we adopted the new lease accounting standards beginning January 1st, 2019, whereby the lease payments associated with our San Mateo facility are now accounted for as an operating expense. Previously, they were treated primarily as interest expense. The impact of this change is roughly $1.5 million moving from interest expense to operating expense for this quarter. Q1 gross margin was 77% compared to 71% a year ago, due primarily to lower capitalized software amortization. Regarding operating expenses, we continue to invest in growing R&D to drive continued platform innovation and further develop our products. We're investing in sales and marketing efforts to support both our self-serve and enterprise sales channels. And we've also made investments in G&A to operate as a public company. Operating margin in Q1 was break-even. Adjusting for the $0.9 million in transaction costs related to our Usability acquisition, operating margin would have been 1%. Unlevered free cash flow was $7.5 million for an 11% margin. Adjusting for the Usability transaction costs, unlevered free cash flow would have been $8.4 million for a 12% margin. Total headcount grew to 910 people for a 24% year-over-year increase. This excludes the 130 employees from the Usability transaction, which closed April 1st, and we welcome all of them. Turning to the balance sheet, we ended the year with $166 million in cash and cash equivalents and $217 million in total debt for net debt of $51 million. Now to our financial outlook. With the strength in our Teams offerings and enterprise sales, coupled with the acquisition of Usability, we're updating our financial outlook for Q2 and full year 2019. Our financial outlook includes contribution from Usability beginning April 1st, 2019. The revenue contribution from Usability will be impacted by standard purchase accounting adjustments to deferred revenue that will reduce the amount of revenue to be recognized. The Usability revenue included in SurveyMonkey's financial results will initially be lower than what Usability would have recognized on a standalone basis. We expect the headwind from the deferred revenue adjustment to be strongest in Q2 2019 and then have decreasing impact over the course of the year. Post the deferred revenue adjustment, we expect Usability to contribute approximately 200 basis points of the 17 to 20% year-over-year revenue growth in our full year 2019 financial outlook, a disproportionate percentage of which will be recognized in the second half of the year. We also expect Usability to be a headwind on non-GAAP operating margin and unlevered free cash flow margin. For Q2 2019, we expect total revenue to be in the range of $72 million to $73 million for approximately 16% year-over-year growth. As a reminder, in Q2 2018, we benefited from the pricing changes to our self-serve customers that began in mid-2017 and drove maximum core revenue impact with 21% year-over-year growth, setting up a more difficult comparison from a year-over-year growth perspective in this second quarter of 2019. Operating margin is expected to be in the range of -4% to -2%, and diluted weighted average shares outstanding to be approximately 130 million shares, inclusive of the shares issued in the Usability acquisition. Now for the full year 2019, we expect revenue to be in the range of $298 million to $304 million for 18% year-over-year revenue growth at the midpoint, implying 20% year-over-year revenue growth for the second half of 2019 at the midpoint. Operating margin is expected to be in the range of -1% to +1%, and unlevered free cash flow to be in the range of $50 million to $53 million for a 17% margin. We expect 2019 fully diluted weighted average shares outstanding to be approximately 130 to 133 million. With regards to the CFO search, we are attracting world-class candidates, and I look forward to sharing the news about this critical hire. We're confident in the investments that we're making to drive enterprise sales and adoption of our Teams plans, as well as extending our international business. I'd like to thank all the SurveyMonkey employees for their hard work in delivering a strong quarter and welcome all the Usability employees to the SurveyMonkey troop. Before I open it up for Q&A, I want to close out with some proprietary research that our survey research team conducted. We have more than 2 million respondents come across our platform every day, and we have our own proprietary audience panel. So we're able to gather volumes of data in real time for market researchers. This year, we're seeing some of the largest and most anticipated IPOs come to market, with Lyft and Pinterest already out, Uber pricing tomorrow, and Slack on deck. We ran a recent survey with over 15,000 respondents over the course of a few days about which of these companies they would invest in, with nearly 1 in 3 choosing Uber, followed by a tie between Pinterest and Airbnb at roughly 20%. The results skewed differently by gender, with men more heavily favoring Uber and women slightly favoring Pinterest. We wish all these newly minted and soon-to-be public companies much success in the public markets. Thank you for your time. I'll now turn it over to Q&A. Operator.
Thank you. Ladies and gentlemen, if you have a question at this time, please press the star, then the number 1 key on your touchtone telephone. If your question has been answered or you wish to remove yourself from the queue, please press the pound key. Again, that's star, then 1 to ask a question. To prevent any background noise, we ask that you please place your line on mute once your question has been stated. Our first question comes from Mark Murphy of J.P. Morgan. You may proceed with your question.
Thank you very much, and congrats on the results. Xander, I wanted to ask you at a high level, how are customers responding to the account verification initiative, and more specifically, when you think through the mix of users who were in fact sharing someone else's login, and they decided to opt in to Teams, and when you think about that in comparison to those who perhaps have decided to opt out, I'm just curious how that ratio is looking, because it seems like that the whole equation is coming together quite nicely for you.
Yeah, thanks, Mark. Teams is obviously an important contributor to our paying user growth, and I'll tell you the debut of Teams in Q3, it just dovetails really nicely with the security environment we're competing in every day. It's just not okay to share username and password credentials in an organization, and we know the vast majority of usage of SurveyMonkey is a workplace application inside of big companies, small companies, nonprofits, EDUs. So the security environment has provided a really nice tailwind for us to introduce this really collaborative package, the secure environment that we've delivered this package, a better user experience for users who now have their own login. And as Tom mentioned in his prepared remarks, the Teams plans are skewing to the higher premier mix of higher AOVs. And while we have not yet had to renew a team, because they don't come up for renewal in October, we know that many of the factors that contribute to churn in our individual business around credit card failures or retries or people leaving the organization, we think are absent in Teams. So we're excited about the higher AOV, and we're looking forward to higher net revenue retention from the renewals.
Okay, then as a follow-up, it's a very strong quarter in terms of sequential growth in the deferred revenue that we see on the balance sheet, and I think I'm presuming that is core organic strength in the business, because Usabilla, as you said, did not close until after the quarter on April 1st. Is there a way you could walk us through the drivers of that strength in the deferred revenue? In other words, is that enterprise that we're seeing? Is that more of the annual plans? Is that the use case solution sales taking off, or is there some other effect there?
It's a good question, and it does highlight, we have an incredibly visible business with over 90% of our revenue from subscriptions. Our annual sub now, that mix, is higher than it's ever been at 78%, and that's driven by, the vast majority of our new net adds in Q1 are from Teams and Enterprise, and those are all annual. So it just showcases that SurveyMonkey is used in organizations, and we want our products to be bought at the organizational level, whether that's an IT department, a marketing department, an HR department at the enterprise level, or via the self-serve teams where one person in the organization is taking accountability at the administrative function to buy a team for 4 or 5, 6 people. So the two primary growth drivers, Teams and Enterprise, are leading to a higher mix of annual percentage, which is driving the deferred revenue base, is driving the visibility, and it's seeding, right ground for our sales team to move in to these accounts where there are significant users and teams.
Okay, one final one, if I may. We're noticing that you have these hyper growth rates or hyper SaaS growth rates in the enterprise part of the business, and I believe that your sales force there, you're saying, is going to become larger. I think every quarter for this year, probably in the next year as well. are you able to look at that trend, Xander or Tom, and kind of sense incremental confidence in just how that enterprise growth is going to contribute and help the acceleration and growth upward into the 20s here in the next year or two?
Sure, I can take that one. We debuted the strategy in our roadshow last September, and I just have increased confidence now relative to where I was, 2 quarters ago and even 1 quarter ago. We hired John Schoenstein on September 17th, world-class chief sales officer. He's built out an incredible leadership team from the best companies in the world, many of them, here in the Bay Area, but enterprise, SaaS, large cap internet. That team is firing on a strategy that we believe is going to lead to higher growth in the enterprise sales channel. So what does that mean? That means more people on the ground who are calling into our customer base, right? We have tens of thousands of customers we believe are appropriate to be selling our enterprise solution. So more people is a key driver. More productivity as better training enablement lead to more throughput is the second one. As Tom talked about, the selling to value and making sure that we're moving beyond seat licenses to selling solutions. Usability is a great example of that. It's not just based on seats, it's based on value. And over time, more integration is going to lead to net revenue expansion and cross-selling. So, and everybody's benefiting from this Customer 360 that we developed. It's our own proprietary technology which governs which of the 350,000 companies to be selling into. So you can imagine that for large companies like JP Morgan, where you work, and others, where we have a lot of active users, those are companies that should be on our enterprise plan.
Okay, very good. Thank you so much. Have a good night.
Thank you.
Thank you. And our next question comes from Ron Josey of JMP. You may proceed with your question.
Hey, this is David on for Ron. A few questions. I think we noticed a recent price increase in your SurveyMonkey audience product. Can you talk a little bit about the pricing strategy there, and is there any change in the go-to-market? And secondly, ARPU was up 8% this quarter. What exactly drove that? Was it from Teams adoption or adoption of higher price products or the enterprise rollout? And can you just remind us how you think about the balance between user growth and ARPU as it relates to revenue? Thank you.
Hey, David. I'll take the first. In terms of audience pricing, we are constantly growth testing. So we're thinking about the massive volume of traffic across our website in terms of our pricing plans and individual teams, audience, and we're a disruptor in this market. Our market research product gives folks access to thinly sliced panels that you can build cohorts and get massive amounts of feedback in time periods that nobody else can provide. And so we adjust our pricing as appropriate on how difficult building that panel or cohort might be. And as we launch new features and functionality into audience, you'll see that come through in pricing as well. Now, on the second question, we are driving for paid user growth. All 3 key growth strategies are aligned, Teams, Enterprise, and International, to build out our number of paid users. We do not manage for ARPU. There are multiple headwinds and tailwinds which contribute to ARPU. So we had guided towards expecting ARPU to decrease over time. We saw a strong increase in Q4 and it flattened out here in Q1, still an 8% increase year over year. So we're really managing for paid user growth and then making sure we price our products and solutions commensurate with the value they're delivering for customers, and ARPU is the output.
That's helpful. Thank you.
Thank you. And our next question comes from Eric Sheridan of UBS. You may proceed with your question.
Thanks so much for taking the question. Maybe on Europe, you highlighted the international expansion in the shareholder letter. Just want to know if you get a little bit of a sense of how the transaction you just did is going to be a stimulant in Europe versus some of the organic investments you're making in Europe, how we should think about the investments now working their way into the P&L and into user growth and revenue growth as we move through the year, just so we can better understand investments now versus return as we move through 19 and into 20. Thanks so much, guys.
Yeah, thanks, Eric. Good question. So as I mentioned, 36% of our business is generated outside the United States. Europe is the highest opportunity for us in terms of high developed markets, strong economies. There is no SurveyMonkey of France, of Germany, of the UK, so we want to be the market leader there. And our products have already been adopted by so many enterprises at the self-serve level. So we really did 3 things early this year which we believe will generate acceleration in revenue in the second half of this year and beyond. First is the acquisition of Usabilla, Amsterdam-based, 75% of their people and revenue is outside the United States. They were standing up and winning the best customers in market and competing against some much larger competitors. So we thought this was a gap in our offering, and now that they're part of the family, we feel like our CX offering is the most compelling in the category. Second is we just hired a sales team in Q1. It's small and mighty, but they're already out closing deals, and as they get trained and enabled, we feel like they're going to take down significant share in the back half and in 2020. And then third, Tom's engineering team is standing up a European data center, which we plan to launch the first phase at the end of this month, and we're all going over to cut the ribbon. This is a really exciting opportunity for us to be in the cloud and to provide data sovereignty to European customers, which we know is super important, and deliver faster site experiences. So we feel like we're going to have a world-class offering in the following weeks, and a sales team that's going to be effective at selling it. You'll see the revenue growth pick up slowly. It's not a material contributor in 19. It's better in the second half than the first, and it'll be better in 20 than in 19.
Great. Thanks, guys.
Thank you. And our next question comes from Youssef Squali of SunTrust. You may proceed with your question.
Great, thank you, and congratulations on the solid quarter. Two questions, I guess. One is around the growth in self-serve. So enterprise seems to have been on fire. I think even sequentially it was up something like 24% by our math. I think to your commentary, teams seems to also have been done really well. But can you just expand on growth in self-serve and what kind of firepower are you putting behind that now that it seems that more and more emphasis is on these other two? And I have a follow-up.
Hey, Yusuf. Yeah, I mean we're doing two things. First, we're investing in our products and the platform, the Salesforce integration, the Microsoft integration. Tom talked about some of the key new products and features we shipped in the quarter around sentiment analysis, mobile products. So we're constantly making the product better. The second thing is we're just adjusting the business model so that we can capture more monetization commensurate with the value we're delivering. So enterprise, pretty clear strategy. Teams, we know we needed that product in the market, and we're pretty thrilled with the adoption. We're not breaking out the two, but suffice it to say we are constantly working on driving top-of-the-funnel awareness and user growth into that 17.5 million base of active users. And so whether it's through our marketing channels or the new offline channels that Tom discussed, our international efforts, because we have such high gross margin and low COGS associated with people trying our product, we want to drive that top-of-the-funnel awareness and then move them through the funnel into the right plan, whether that's enterprise, teams, individual accounts, et cetera.
But was there much of a growth decel at the self-serve level?
No, I think the way we look at it, Youssef, this is Tom, is that teams, along with the other SKUs in self-serve in the aggregate, are actually going to be experiencing a tailwind going into the second half of the year. We don't make a distinction, calling the self-serve business anything different from teams. It's really the same surveys business. It's just a different SKU. So I think we're very confident in the self-serve business. And one highlight I would pull out for you is we've seen some real efficiencies in being able to source demand using search engine marketing. We made some investments there in a DMP, and that's really coming back to us as a much more efficient kind of cost per acquisition for self-serve customers. And so we actually expect that we can accelerate in the second half of the year.
Awesome. Very helpful. And then lastly, if you can maybe just help decompose a little further the guide up on revenue and the guide down on margins between Usabilla Enterprise and Teams, that would be awesome. Anything you can do there.
Yeah, I mean, I think we're one quarter into the year. We do have increased confidence in the overall plan. I think the change in the guide is a reflection of adding Usabilla and the 200 basis points that will contribute through the rest of the three quarters, and more of that growth will come in the second and third quarter. The second half of the year. The purchase price adjustments for deferred revenue, we have to be cognizant of. You recognize the full brunt of the cost associated with the people you bring on and the products you're spending, but you don't capture the full value of the deferred revenue. So, it makes your first quarter out of the box with the new acquisition not as pretty in a financial perspective. Over time, we believe it's going to contribute nicely to that acceleration of our top line, and you can see we're guiding at the midpoint to 20% growth in the second half, and I think we'll finish the year at a really good clip.
Great, thanks.
Thank you. And as a reminder, ladies and gentlemen, that's star then one to ask a question. Our next question comes from James Rutherford of Stephens. You may proceed with your question.
Hey, good afternoon, and thanks for taking the questions, Xander and Tom. Couple of questions from me on the enterprise. First, you're seeing great success in adding customers here, especially in what's typically a seasonally weak quarter for enterprise selling, so very impressive. But I'm curious, what are you seeing from those enterprise customers after they adopt SurveyMonkey? Are you seeing good spread of adoption within the organization, be it additional seats or additional departments that kind of adopt the technology?
Hey, thanks, James. Yeah, Q1 is not seasonally the strongest quarter for enterprise sales, and so for us to continue to add customers at the same clip in a traditionally weaker kind of seasonal quarter was great, and proud of the team. You asked a good question, which is kind of key to our business model. It really is about net revenue retention. Our ability we've already landed via self-serve in 350,000 organizations, and so utilizing that customer 360 and steering our kind of new and highly trained sales team into the best 10% of those accounts leads to our ability to sell that initial enterprise deployment, and that then leads to expansion via more seats, new cross-selling solutions. So, when you turn on single sign-on and domain lockdown and you give the IT department and others kind of that holistic view of the data, we're really excited by the net revenue retention we're seeing. We don't break it out by our different classes, but we're over 100% year over year on our organizational domains, and you can imagine at the enterprise level it's more favorable. So I think that is going to be a key hallmark. Once we get SurveyMonkey integrated into the workflows and other systems of record that are important inside the organizations and enable people to collect feedback so they can do better by their customers and employees, that just leads to incremental growth for us.
Okay, that's helpful. And then a question on the model, if I may. Gross margins improved quite a bit sequentially and year over year, with their COGS actually declining on a dollar basis. I know you mentioned a little bit about this in the prepared comments. Can you talk about, once again, some of the drivers there and what the outlook for the year is on the gross margin line? Thank you very much.
Yeah, it's two things. It's acceleration of revenue, and it's a reduction in capitalized software. So as that amortization, it helps us there as we're amortizing less over the gross margin. So you see that 71 to 77% move year over year.
Great, thanks.
Thank you. And our next question comes from Brad Sills of Bank of America. You may proceed with your question.
Oh, great. Thanks, guys. Wanted to ask about the audience go-to-market you mentioned earlier, Xander, kind of going to market with some reps assigned to specific verticals in the enterprise. What led to that? Are you seeing some traction there? Is there a certain vertical play there in financials and consumer? And should we expect to see that type of organization for CX and Engage down the road?
Hey, Brad. Good question. I think the IPO roadshow helped crystallize our thinking here. When you go out and see 100 of the world's best banks and institutions and analysts and showcase the power of what our market research product can do in a really timely period. So for us, we had a lot of self-serve customers on our audience platform, and recognizing that we had particular concentration and strength with some of the world's best financial institutions and CPG companies, we stood up a small sales team to really kind of use those targeted named accounts and deliver better service. And that we're only doing because we feel like there's significant expansion within those named accounts. And the team's off to a good start. I think there's a ton of runway here. If you think about the private equity funds, the hedge funds, mutual funds that you all interact with on a daily basis, when you're putting millions, tens of millions, billions of dollars of work, people are spending a percentage on due diligence, and SurveyMonkey can deliver the kind of market research on a finely grained basis. It's why we disclose stuff from the CNBC Small Business Index today. It's why I shared the little tidbit on what men and women think of Uber versus Pinterest. We're able to deliver via market research incredible intel, and finance and CPG are obviously two huge pockets of companies for us to go after. So that new sales team will expand and take down other verticals over time and likely sell the other solutions you just mentioned.
Great. Thanks, Xander. And then one more, please, on the Teams conversion. There's the account verification activation, and then there's the enforcement. I mean, what do you expect the shape of the adoption, if you will, or migration to Teams after accounts have been verified over time? I mean, what have you seen so far in terms of that conversion?
Yeah. Hi, it's Tom. The way to think about it is it's a steady build. And so what happens is we turn on a pool of users for account verification, and they some of them log in right away, some of them don't log in for another month. And then, they run into the sort of friction, and that, we give them sort of 1 pass, 2 pass, skip this dialogue, 3 pass. It's a time series between when we turn it on and when they adopt. And then after that, they have to make a purchase. And so we've seen the time series be varied from a week to a month to a quarter. But in the aggregate, what we've seen is a slow, steady build over time as that cohort starts to purchase. And so it's a great sort of, if you will, tailwind for us because it just continues to be a steady build over the course of the year. So we're really encouraged about it, with account verification really being phase 1. And then phase 2 is once we start to look at all the behavior that we see, it'll be about expanding teams or about identifying places where maybe they're not adopting as quickly as we would like, and we want to apply a salesperson. So we're really only in phase 1, and we feel very confident on the tailwinds for the second half of the year.
Great. Thanks, Tom.
Thank you. And our next question comes from Stephen Ju of Credit Suisse. You may proceed with your question.
Okay, thank you. So, Xander, I guess the takeaways from what Usabilla adds are mostly toward what they can do to help you expand internationally. But looking at this in another way, what can you do for Usabilla to help them accelerate their growth? Any perspective you can add in terms of what product tools, I guess SurveyMonkey can help them build so that the salespeople are more effective? And I'm just looking for scenarios where the product synergies can result in something greater than the underlying pieces. Thanks.
Yeah, great question, Stephen. I feel like I've answered that question before from the usability team. It's a good one. I think you highlighted the first from an obvious perspective as a shareholder. There is no lead generation flow like SurveyMonkey's. When you just look at the volume of customers we have and our ability to use that Customer 360 to identify targeted accounts, folks where we have significant relationships, either on the self-serve side or enterprise side, I think we can fill the marketing funnel and demand gen for the Usabilla sales team for a long time. Second, we have a world-class CTO in Robin Ducat and Chief Product Officer in Ross Moser. I mean, we have a team that can help that product and engineering group scale, integrate closer to our solution for marketers. As I mentioned, this is a product that we didn't have in our portfolio, and I think over time we'll pull that closer into the family so we can go to market with a more integrated offering. So I think we're going to help them on sales and marketing. I think we're going to help them on product and technology, and I think this is a team that we did a lot of diligence on culture, and we feel like we have a team that's a great fit. So I'm looking forward to a lot of productivity out of the combined entity.
Thank you.
Thank you. And I'm not showing any further questions at this time. I would now like to turn the call back over to Xander for any further remarks.
I just want to thank you all for your continued interest in SurveyMonkey and your support. We're on a journey, and I'm thrilled with our team's performance over the last several quarters and being vigilant about pursuing paying user growth, consistent revenue growth, and really focus on building a long-term, very profitable business. So appreciate your ongoing support and look forward to talking to you in 90 days and many of you in the interim. Have a great day.
Thank you, ladies and gentlemen. Thank you for participating in today's conference. This does conclude today's program, and you may all disconnect. Everyone have a wonderful day.